Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. And also we'll get you the expert views as to where are the opportunities emerging for you as an equity investor now, the stocks and the themes that you should be focusing on to ride the bull run that we've been witnessing. But first up, a quick check on the markets. Well, it's been a brighter Monday, no Monday blues for sure. About a 500 point of a jump is what we've already witnessed on the Sensex today. Right now it's trading 380 points higher, 62,886. The Nifty is above that 18,600 mark as well, 106 points of a jump for that one, half odd percent of gains, but they had both opened up with a higher momentum as well. The broader markets are doing well as well, and we are seeing an in tandem move on both the mid cap 100 and the small cap 100 indices, half odd percent of gains for both these indices as well. Now when we talk about the other stocks and the indices that you should watch out for in terms of the sectoral move, the Nifty Bank is definitely moving higher with 0.8% of gains on the upside. We're also seeing some momentum on the other indices like the auto stocks are up by half odd percent, financial services doing much better, 1% uptick for that one as well. The FMCG stocks are up by 0.7%, metals are shining bright, 1.1% uptick for this one. We're also seeing the PSU banks, the private banks, the realty stocks also higher in trade, barring slight losses that's on the IT pack today, on pharma for example, and slight losses coming in on the healthcare pack as well. Rest of the stocks actually look better in an overall momentum that we are seeing in the markets. But time to welcome our guest on the show. Shrikant Chauhan really joins in, Head of Equity Research at Kotak Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, looks like the bulls are back in action. How long is this rally going to sustain is the big question. We've already seen the Nifty Bank touch all-time highs today. Now it's all eyes on the Nifty. How soon do you see that reclaiming the all-time high levels?
Yeah. Good afternoon, Sakshi. Yeah, I think we are very nearby, and the way there is performance in almost all the indices, I think very shortly the markets are going to regain the levels of 18,900 or 19,000, which was the all-time highest level. But if we go through with the overall mood on the street, then investors as well as traders both are optimistic, but at the same time they are highly cautious, and that's the reason the markets are going up gradually. So yes, at these levels we may see some correction. Again, the possibilities of 18,500, 450 is not ruled out because the street is cautious. But the overall momentum and overall performance of the sector is suggesting us that the strategy should be to buy on dips, and eventually the markets are on the verge of crossing its previous high. So we should be buyer in good companies or maybe index equities.
Okay, but what is really leading to this momentum? Is it the FII flows? Is it just this temporary bump that we are seeing from the US markets, especially with the deal done on debt? Is it that, or is it something that will take the Nifty structurally on a higher level as well?
I think see it is mainly because of FIS buying, which is consistent in the last 20-25 days. FIS bought nearly 20,000 sort of crores in the market. Domestic institutions are they are seller, but the amount is very less. Again, if we go through with the uncertainties or the news flow on which there was like a lot of confusion in the world markets, now there is like a lot of settlements or some clarity is coming, and maybe that's the reason we are seeing upward activity in the market. Also, Q4 numbers were as per expectations. They were not over and above disappointing. So all these factors actually supported to the market. So we can say that it's a structurally positive for the Indian markets, and the strategy should be to buy on dips. A lot of funds, I would say Indian funds or Indian retailers, they are consistently infusing funds in the market, and that's the reason the downside is very much limited.
Okay, so in terms of levels, both for the Nifty and the Nifty Bank, what are the levels that you're watching out for next? What should traders be prepared for?
So actually, one thing is very clear that 18,200 is now going to act as a trend decider level for the market, because in the previous week and in last 15 days, most of the time, whenever the market has fallen, 18,200 acted as very good support for the market, and it has surpassed the level of 18,500, which is positive. So the next level to watch out for would be 18,700 and 18,900. On the downside, the support will come at 18,500 and 450, around which the market was like finding some resistance in the previous week. So 18,500 is the support area, and below that, on immediate basis, 18,400. So for this expiry or for next few days, we are expecting market to remain between 18,400 and 18,800.
Okay, 18,400 to 18,800, that's the range going to be for the Nifty at this point in time as well. But if I had to ask you, for all those investors wanting to ride the bull run that we are seeing currently, which are the themes one should bet on? Which are the sectors that one should keep on the top of their radar?
See, now the market has broken its important level, and whenever like the market trades below the important level, we require support from strong heavyweight sectors like banks or IT, where there is huge amount of weightage and they can help the market to cross the levels. But now, after crossing the important level, the focus will again shift on those sectors where investors or those who are like fund managers or institutions, they can make money for the they can make money in the longer run. So maybe we need to focus on those sectors which are not parallel to the index, but they are really doing well in last few months. Like power sector is the a sector on which we are specifically bullish, and we are focusing on the sector very closely. There we are searching opportunities to buy for, and we also like a few IT companies, because there also we are seeing some strain, some selective buying is happening. And metals, no doubt metals are doing well in today's date, but most of them are crossing their important levels.
Okay, power, IT, metal selectively, these are the spaces that you need to really watch out for. But before I come to stock specific reviews of yours and the stocks that you may be watching out for, interesting data point that we want to share with all our viewers, and I'm sure you can add on to that as well. The way the Nifty has performed over the last few years is something that let's watch out for. We've been talking about this 9 years of Modi government and how the Nifty has become twofold in this 9 years as well. So D-Street investors have definitely got richer by 20 lakh odd crore rupees as well. Let's look at the kind of returns that the Nifty has given over the last 10 years or so. Starting from 2013, where we got a return of 6.7%. 2014, of course, that was the influx of the new government led by Modi, and that's when you saw the Nifty giving you a return of 31.4% at large. 2015 was a very moderate year where we saw, negative 4.06% return. Again, for 2016, when we talk about, there was a very minor 3% bump up. 2017 again was a good year, 28.65%, again an exceptional one. 2018 again 3.15%. 2019 we saw a 12% return, and 2020 there was about a 14 to 15 odd percent kind of a move that we saw. Again, when we talk about the kind of levels that we had been seeing from starting from those levels as well, 2019 was 12% again, 2020 was 14.17%. Those are the kind of returns that you saw. 2021 was 24.17%. Again, a good year for the markets returning after that pandemic. Again, negative 4.23% in the last year. And now the question stands for 2023. Now, Shrikant, I wanted to understand, Jan, Feb, March and April, 4 months that we have seen, it's been very, very muted, very, very range bound, more volatile, full of concerns for the Nifty. How does the rest of the year really look like for you? Of course, you do say that, the markets will be able to perhaps retest the all-time high levels. But what's also important for investors to understand, then what happens thereafter? Are the markets going to see profit booking again? Are we going to, because, at the beginning of this calendar year, not many analysts were very hopeful. They were saying that this could be a year of low return or no return at all. How would you really think that the rest of the calendar year will pan out for the Nifty?
Yeah, I think very clearly it was like the year of we were expecting some range bound sort of activity, and the markets are still in the range. They have not broken its previous high of 18,900, which is clearly indicating us that we are going to see range bound sort of activity. But at the same time, initially, I'm going to say in the first part of the year, of this calendar year, we saw good amount of correction. The market was somewhere close to 18,500, 900 levels. In the month of December 2022, if you see the highest point of the Nifty, then it was around 18,900. From there, all the way it has fallen to 16,800, and now again it is coming back. So again, still it is in the range. And if we see the levels of 19,000, then again the market will start quoting at 19, 18, sort of multiples if we consider FY25 of earnings. So around 18, 19 multiples, again, we are seeing going to see some profit taking. So we are expecting markets to remain in a range. Uh, to trade, to sustain above the levels of 19,000, we need something really positive for the economy. I mean to say, if US market starts, I mean to say US economy or in the US interest rate starts coming down, which is very unlikely. But if that happens, or if the dollar index falls to, let's say, 102, 101, if the bond yield falls to 3%, or if crude falls to, let's say, below 70, all these factors are going to support the market. Or if the monsoon comes better than the expectations or above normal, then we can expect a rally beyond 19,000. Otherwise, we are expecting market to remain in a range, and we are
Okay.
still of the view that we should be invested in almost all the asset classes.
Okay, understood that. Now, if I had to talk about stock specific moves for all those investors who may be looking at this kind of a move in the markets to add on some stocks to their portfolios where one can generate alpha, despite the fact that the markets may remain range bound, which are those stocks that you would really recommend from your basket that investors can keep on top of their focus?
Yeah, I think, say, like at these levels, we need to focus on those sectors where we can see some re-rating in terms of increase in the multiples, or
Sure.
earnings should be better than the past few quarters. And in that context, I think if we really need to focus on any sector, then I think power sector should do well. No doubt BFSI is going to do well because the numbers are excellent, and the way currently they are positioning themselves, and there is like capex from the government, all these things are going to help BFSI. But now the upside is limited. We need to focus on those sectors which can do well in the next 6 to 12 months of time. So power is the sector on which we need to focus, and also we need to focus on those companies which are like parallel to the overall announcement in the market, like PSUs from the Gujarat side. All these, I think, sectors and stocks are going to do well.
Okay, so particular stocks from your basket with any stock ideas that you can share?
Yeah, I think, see, from the power space, we like almost all the stocks based on their technical formation. Fundamentally, they are very close to their fair values, but we are of the view that they should do well in the near term. We like NTPC, which is currently around 175, 177. We also like Tata Power, which is around 210, 212 levels. It's a range bound stock. It is not crossing the level of 230, but whenever there is a fall in the stock close to 200 or 195, we see some buying interest in the stock. So PFC, REC, these are the stock on which we need to focus. Also, if we go through with the Gujarat PSUs, then in that we like GSFC as well as GSPL, Gujarat State Petrol. So these are the
Okay.
stocks and a few companies on which we can focus.
All right. On that note, thank you so much, Shrikant, for being with us on the show and discussing with us all the insights about the markets, sectors, themes, and specific stocks that investors can keep on their radar in case they want to ride this momentum in the markets for sure. Many thanks for being with us. Well, the market's still up in trade, although slightly off the high point of the day. 380 points of an uptick for the Sensex, 100 points of a jump still for the Nifty. It's trading at 18,603. The question is, will this momentum be maintained till the closing of the day or so, because we are inching towards the series expiry and the monthly expiry as well. So that could definitely be something to watch out for, and whether that can derail this momentum is another question. And we will continue to watch out for all these things that may impact the market momentum, and you can track the same by being with us on Business Today TV. So don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, thanks for tuning in.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and with me Naveen Khemka, the Chief Executive Officer of Essence Mediacom. Just 4 months in the making, and they have won the most coveted award at Goa Fest. Naveen, congratulations. Tell us more about what you really have won and what does it mean for the